Telling you and talking about this for quite some time. We've been talking about how inflation is rearing its head again. We've been talking about how there has been a significant surge as far as the prices of base commodities are concerned, agricultural inputs are concerned, and even one of the most important raw material imports, or one of the most important imports for India that causes a significant bill, crude oil, that too is on the boil. So another very important major world voice has spoken about inflation. Jeffery Gundlach from Doubleline Fund has actually spoken about inflation in his Total Return webcast. He says that he sees inflation over 3% for a couple of months this year, and he's saying that in June and July we must be prepared for inflation to raise over 3% on a year-on-year basis for those 2 months. Now, what they are saying and what Gundlach is saying is, in his opinion, not only is the Fed unconcerned by increased inflation, rather they would be welcoming it. In fact, he says, as a result, negative interest rates will actually make the federal debt easier to manage. He also says that he's quite bullish on commodities in the longer term, so he believes that the commodity rally could continue, and on the longer term, the other important call that he's making is that he's quite and very negative, in fact, on the dollar longer term. So he's bullish on commodities in the longer term, and also same time frame he is short or negative as far as the dollar is concerned. Gundlach, remember, turned neutral on gold prices when it was around $1,800 per ounce. Now he sees gold likely bouncing back in the longer term because the sell-off has been very powerful. Double line model shows that gold currently is at fair value. In fact, he says that he would not be surprised, and he calls for the VIX to go over 100 during the next downturn. He says in the investment grade corporate bond market, the downgrade cycle appears to be over, and he says the upgrade cycle has probably started to get underway. He says that the rising rates are luring retail money back into loans. Now, what he's saying is that within the stock market, he's making a very bold call. He says that Gundlach says that he does expect the stock market to decline. He says that it could be more than a 10 to 15% downtick that the market could see. However, he says, I don't know if it would be more than 80%, as big short investor Michael Burry has recently indicated. He ended the webcast saying that farmland continues to be one of the cheapest assets in the world.